So next up, let's take a look at network usage and various on-chain metrics and how they correlate or can be applied to price action. So we can look towards on-chain metrics such as transaction count during periods of dramatic price increases and decreases to evaluate whether or not overall network usage correlates with price action. Let's continue to focus on the same examples from the previous comparisons. We'll take a look at Bitcoin dominance from about 70% in January 2021. And we'll also take a look at Bitcoin dominance, particularly when it fell from 60% to 40% from May to April 2021. So these are particularly interesting time periods in Bitcoin's market cycle. So here is a chart from Glassnode. This is a measurement of the Bitcoin number of transactions. Here we see overall the price is in gray and the number of transactions is in orange. We have seen overall the number of transactions generally was trending down throughout this 6-month period from the beginning of January into July. Generally, people were not using Bitcoin for transactions during this time period. Now, while price continued to produce new highs, here we see a bit of a divergence. Price is moving higher, but the number of transactions is coming downwards. So this could have been interpreted as a sign. General network usage was declining. If price is continuing to go up, if the network usage is going down, it could be assumed or predicted that it's entering some sort of speculative bubble where the valuation is not necessarily meeting the reality of the use of the network. Remember, these are payment coins. These are digital currencies are meant to be used in transactions. First and foremost, if the number of transactions of Bitcoin is going down, but the price is continuing to go up, there's a bit of a divergence there and a sign of a disagreement. And this ultimately came into fruition into middle May, late May 2021, and into June and July as well. Now here we see a somewhat of a different story in Ethereum. Now, while in the same time period, while Bitcoin's overall number of transactions was declining while price was moving upwards, we do see the number of transactions generally increasing alongside with the price of Ethereum and reaching an all-time high at this particular moment of just over $4,000 per Ethereum, and once again the number of transactions spiking alongside with it. Now what's interesting here is we see this severe drop in activity and network activity, and for it to really drop that dramatically in terms of just number of transactions, this could have been a sign of this is really general overall network activity volatility. Why did this drop occur so strong and so heavily in terms of number of transactions? Why did people stop using Ethereum so suddenly? At this point, Bitcoin was beginning to crash, prices were beginning to fall, so this could be a reaction to the market leader of Bitcoin beginning to really capitulate and pull back in terms of price action, in terms of network activity. And this is the reality of trading altcoins. While the picture could be bright and sunny in the world of Ethereum, if Bitcoin is not in conjunction and it does not align with what you're seeing on Ethereum, that might be short-lived, because really all the altcoins, all the cryptocurrencies highly depend on Bitcoin's price action and overall market structure to base their own market structure and price movement along with. Here's an example. This is provided from Messari, these analytics. Messari Analytics is an analytics company. particularly, we're taking a look at Compound. This is a lending platform, lending protocol, and we're taking a look at their transactional volume in blue and the price of Compound in gray. So here's our gray line. Overall, Compound producing increasing highs. There was a bit of a small downtrend observed here from maybe middle February into April, beginning of April, where Compound would reverse. We do see a market structure break in price and overall producing higher highs and higher lows. What's interesting here is, once again, transaction volume really is very telling. We do see this dramatic drop in transaction volume, and it reaches a high, reaches a higher high, reaches a higher high, higher low, reaches a higher high found here, higher low found here, but then produces a lower high. It fails to oversee this, but price continues to move higher. So which one is right? How do we know what's going on? Well, overall, over the next few weeks into 2 months, we do see Compound transactional volume decrease to the downside while price was moving upwards. And then we do see the correction in terms of price on Compound. This would be reverse, because now we're starting to see Compound transactional volume increase. We particularly see that into late March. Transactional volume is increasing, spikes up, while price is coming down. We do see another divergence. Transactional volume is leading us and is giving indications of what possibly is going on in terms of network value, network worth, and usage. And here is another small cap coin. This is considered an altcoin. This is Kyber Network. Kyber Network is a very low cap decentralized exchange, much lower in terms of transactional volume and amount vested in compared to, let's say, Uniswap. But it's good to take a look at a variety of sized coins in these comparisons to see if something is only applicable to only large cap, only Bitcoin, or if it can be applied to any coin on the spectrum of size and space. Once again, we do see overall prices are getting higher and higher. We do see generally, we see some spikes in transactional volume, but no clear trends. If we're looking at the bottoms, we see this is a bit of a downtrend. Price did produce a higher high observed here in late February, but generally the lows of transactional volume of Kyber Network was declining, generally producing lower highs, lower lows. At the same time, price was increasing. This could be interpreted as a sign, because shortly after this early February into late February area, we do see a dump to sub levels. This is coming from about $2 to $2.20, and generally we see this dump to about $1.60. So this could have been interpreted as a corrective sign as well. And generally, we do see lots of spikes in transactional volume. Once again, Kyber Network's transactions volume is not as clear cut as possibly we could see on Compound or Ethereum as a whole, or maybe even Uniswap. But it's good to take a look at a variety of examples to see how and if they correlate with each other.